Hello everybody, welcome back to the channel. My name is Steve, and today I want to talk about five stocks that I'll be buying for the month of August and adding more my portfolio. And I already have these in my portfolio, but I'll be adding to the positions that I have. And I wanted to go through a couple of them, well, a few of them, and I want to add one bonus one at the end. So just stay tuned to the end, and I'll add another bonus. So it'll be five to jump off with. So let's jump into it. The first stock that I'm going to be buying this month is JP Morgan Chase Bank, ticker symbol JPM. Now, right now it's pre-market, so it's currently trading at a price of 114.21, and it's off this 52-week high of 172.96. Now, this stock right here I've held for a couple of years. You know, besides me banking with them and everything like that, they come in at a PE ratio of 9.16. Earnings per share at $12.47, and they have a nice forward dividend of $4 with a yield of 3.47%. So it's a pretty good dividend on this stock. Now, this stock right here, like I said, is coming off of this 52-week high of $172. Chase Bank is a very good stock if you're in the bank stocks. Like me, I'm in the bank and a lot of financial stocks. Now, the thing with this is it's at a low of 114.21. Now, this, with the rising interest rates and all that stuff, a lot of bank stocks are going to be in play. A lot of financial institutions are being in play. They're raising the interest rates. Thus, like, you know, people have to get loans and stuff like that. These banks are going to be taking advantage of that. Banks are one of those stocks where, you know, a lot of people fly over them because the stock might, you know, they're steady. They're considered boring. They might be cyclical. A lot of people say they're cyclical. They go with the economy. A lot of stocks go with the economy too. But banks are always going to be in demand. They're always going to be here. The federal government works through banks. So as far as that, JP Morgan is a good investment. I like it. I like the way they, you know, the way the service is, and I just like banking through Chase. But yeah, that's the first one. It has a market cap of $335 billion, and yesterday it had a previous close of 115.36. So if you want good value, if you're in the bank stocks, JP Morgan Chase is something you might want to consider. Now, the second business I want to talk to you about that I'm going to be second stock is ticker symbol BABA, Alibaba Holding Companies. Alibaba, a lot of you know, is like it's almost like Amazon, but it's centralized in Asia. Now, Charlie Munger is one of the people that are big on this stock, and I learned about Alibaba about 2-3 years ago when it was smaller, and it had this thing where it just took off. And I was like, man, if it dropped low enough, I'd be able to jump into it, you know, after, you know, doing some research on it and finding out what it is and then the potential it has. And I was like, you know, it'd be a really good investment. But yeah, getting back to it, it's coming up. This right here is presently at, it closed yesterday at $90.34. Pre-market right now, as we speak, it's at $87.31, right? Now, it's off of this 52-week range of its high of $203.27. So it's a lot of room for growth here once everything straightens itself back out, you know, with the economy and stuff. So if you're looking for a long play, because all of the stocks I deal with, they're long plays. I'll get the stock and I'll plan on holding it forever, if, you know, time permits. But this right here, it doesn't pay a dividend, so it's a growth play. So you're buying this to put in your portfolio to, you know, once we get back into the bull market, to boost your portfolio with growth and extra type of boost. It has a 1-year price target of $158. So from $90 to $158, you know, there's a lot of room to grow. It has a PE ratio of 30, but I'm a long-term dividend investor. Now, it doesn't pay a dividend, but I'm in this, like I said, I'm in this for the long term. So right now, as of now, that doesn't really matter with me. And it's not a bad thing, you know, as far as, you know, depending on what you want to do, as far as your plans with holding this stock. All right, that's Alibaba number 2. Now, Alibaba, getting back to it with the company outlook, right? Besides it having a $158 1-year estimate, I expect, this is just me, I'm not a financial advisor or anything like that, and I'm not trying to say this to, in the next 3 to 5 years, I expect this to be just as big as Amazon. You know how Amazon is over here, because this is big like Amazon in Asia, but I think this will rival Amazon, like really rival it in 3 to 5 years. Now, that's just my opinion, don't judge. But yeah, that's the play I'm going with. So at least 3 to 5 years I'll hold this stock, and depending on how it takes off and what benefit it offers to me in my portfolio, we'll see where it goes from there. Now, the third stock number 3, this is one of my favorite stocks. It is ticker symbol FNF, and it's Fidelity National Finance. Now, this is what I like about Fidelity. Fidelity is like, you know, it's basically a company that a lot of people, they have mutual funds and a lot of stuff for your retirement. Like they help people, you know, guide people to the best way for them to have their retirement. A lot of 401ks are ran through Fidelity National Finance. Now, it's a good company. It has a market cap of $11 billion, and it has a previous opening at close yesterday. It closed at $39.58. Pre-market today is at $40.26. So it's a 68-cent rise from yesterday. The 52-week high is $56.44. Now, this stock right here, and a lot of these stocks, these financial stocks, they have these ranges where like it's not a lot of growth. That's why like Chase, how Chase jumped up, it has a high rate when you're jumping up on it. This stock right here with the 52-week range is $56.44 at $39. It's still some growth there, and it won't get away from you. Now, the forward and PE, right? Not the forward and PE. I'm sorry. The PE ratio right now, the dividend yield, well, the PE ratio is 5. That's a 5 PE. That's very low, which is very low. Earnings per share is $7.75, right, per share. And the dividend is forward dividend is $1.76, and then you got 4.4% dividend yield, and that's good, especially like for a dividend investor when you're trying to stack your positions in these type of companies. But yeah, another thing I like about this company, if you go to their financials, their total revenue has been flipping year over year. In 2018, 7.5 million. 2019, 8.4 million. 2020, 10.7 million. 2021, 15 million. Well, 15 billion. Now these are billions instead of millions, I'm sorry. And then right now, we're sitting at 15, it's estimated to be at the end of the year, $15.086 billion. Now, this is definitely a play, and I'm definitely going to be adding up on this. What did I miss? Okay, yeah, that's it. Yeah, but this is a play where, like, you know, this basically deals with, like, you know, financial planning. It's almost like Ameritrade, where they have a lot of, they have their own ETFs, index funds. When you want to retire, these are the people that a lot of people go through or have 401ks through their company with this financial company, Fidelity. Ticker symbol FNF. All right, going to the number 4, Johnson & Johnson, ticker symbol JNJ. We bring it up here, and it's trading right now at close yesterday, $173.91. Today is pre-market. It's at 173.24. Just information. off of a 52-week high of $186, and it pays a forward dividend of $4.52 annually, and which equates out to 2.59% on the dividend yield. Presently trading at a PE ratio of 25, but we talked about it being a long-term dividend investor. Doesn't really matter. You just want to put yourself in big companies. Market cap $457 billion. Now, I've always liked Johnson & Johnson. Anybody that has, their own place, you can go and walk around and you can find something with the name Johnson & Johnson in their house. These are, you consider it healthcare, because a lot of stuff they do is for improving somebody's self and health related. But Johnson & Johnson is one of those companies that, early in my investment career, it was too high for me to afford. Sometimes you start off, you don't have the money, and then, you have companies that you always want to get into, and when they dip, like now in the market, right, that's happening right now, these are the times that if you can afford it, to jump into it, because, any company that you have, because you never know how long it'll be before, this recession or all these days are over, to where this thing can turn around and take off, and you don't know if you'll get it at this price again. Now, it's a little pricey at 173 because Johnson & Johnson is one of them stocks where it doesn't do like Tesla or anything with a high volatility where it jump all the way down and then shoot back up. This is not one of those stocks. This is a slow, steady company, a blue chip stock. If you want an example of a blue chip stock, Johnson & Johnson is that. It's historically, the company's been around over 100 years. And long-term outlook, performance outlook, is in the green. Now, this is one of those companies where, say, you're new in investing, but you like Johnson & Johnson and you want to get a blue chip company. I'm just telling you from my example, what I would do is, I would see it says $173. I would buy one share. And every time it dropped down below this, I would buy when I could afford it. And then it would, I would try to dollar cost average, monthly. But I would always have like a staked number of when I brought in, and I would try to go below that to keep myself out of range of just throwing money into it and then trying to catch it from behind. Now, this has a PE ratio of 25, and this is one of my favorite stocks, and I'll be adding more to it. All right, last stock is ticker symbol MO, Altria Group, a dividend aristocrat, and it is it's at a PE ratio of 44. Now, a lot of people will say, but we doing long-term dividend investing, so right now that's not really a factor. It's off of this 52 range of $57, but it's presently trading at $44. The dividend, this is key. This is why I love Altria. The dividend is 8.21%. Right now, Altria, a lot of people know, is a tobacco company. They deal with the smokeless tobacco. They brought the company Juul with the vapes, where people are messing with they use the vaporless cigarettes, and they deal with brands like Marlboro and other things, like if you're a smoker. Market cap is $79 billion. P ratio is like I said, 44. It's coming off of a high of 57.05, so some room there. And the dividend, like I said before, the forward dividend is $3.60 a share annually, and it pays an 8.2% dividend yield. Now, my thing with this company is it's strictly for a dividend play for me. Now, what's also amazing is they said that all of the revenue that they get is not just from cigarettes. Like, they could get rid of cigarettes and still be a productive company and keep the dividend. When I heard that, I was like, man. So that made me start do some research. And a lot of people are picky about these tobacco stocks because, cigarettes and, the health risks that are involved in them. But like they call these sin stocks. But I mean, as far as that, people are going to do what they're going to do, you know. So I try not to involve myself in that type. But I mean, I just look at the company as a whole, and it's a very good company. So those are my 5 stocks that I was going to talk about today. So we're going in order. We're going JP Morgan Chase, Alibaba Financial. Fidelity National Finance, Johnson & Johnson, and Altria. Now the bonus that I have is this company here, Vici Properties. Now this right here is a commercial REIT. The ticker symbol is VICI. I love Vici. Vici, nice. Look, $34 a share, right? It pays a dividend of 4.26%, right? As a dividend yield, forward an annual dividend of $1.44, right? PE ratio is 36. It's off of the 52-week high of $34.49. So it's at its 52-week high. But like the 52-week range, is the lowest it went was $26. Now it's a little bit high, but as far as the value, it has a 1-year target of $36, right? And then on top of that, Vici is one of those companies. Well, let me break down what Vici is. I done got carried away with it. I didn't even talk about what Vici is. Vici, the profile of Vici is this. Vici is a company that's located in Las Vegas, right? And it says Vici Properties is an experimental real estate investment trust that owns one of the largest portfolios in the market-leading gaming, hospitality, and entertainment destinations. Basically, this place, Vici, owns part of the Las Vegas Strip and the blocks that surround that. So if you've been to Vegas and you're walking up and down some of these strips and side streets, and a lot of that land out there that doesn't have anything on it and it says land for lease and stuff, Vici owns that. A good portion of that. So Vici is one of these companies. The reason why I like Vici is, as far as the summary, Vici pays a dividend, right? And then they pay a high dividend of 4.24%. And then on top of that, they got land for days out in Vegas that new companies are trying to come, new casinos, anybody come, they got to go through Vici. When we were having all of these bad times, Vici was still rising. Like even in economically right now, they never have, like real estate REITs, these REITs have these charts where when times are bad, they see who can pay the rent and who's late on the rent and all of that. Vici never had that problem. They never had these problems. Now, granted, it's only in one concentrated part, Las Vegas, but as far as them making their dividend and paying shareholders and in tough times, I love Vici. It's worth taking a look at. Now, like I said, I'm not a financial advisor. I'm just somebody that enjoys stocks, talking about them, and investing. And I implore everybody to do their own due diligence. These are the stocks I like for this month and adding my portfolio on my road to financial freedom. So I figured I'd share them with you, and hopefully, you know, you guys might, some of them might work for you if you do your research and check it out. But that's about it, guys. Those are the 5 stocks plus the bonus stock, Vici. Just leave me a comment. Let me know if you guys check these properties out. Do you have some of these properties? Are they in your portfolio? What you think about them? I'd like to hear back from you. As usual, my name is Steve, and if you could, like and subscribe. I upload every day, and I'd love to hear from you. So everybody have a happy Tuesday morning and a good rest of the month of August, and I'll see you soon. Thanks.